It's 9:01 a.m. here in the Philippines, as we have some speakers who aren't. So I'd just like to greet everybody, welcome everybody to today's event. My name is Paco Pangalangan. I'm the Executive Director of Strat-Based ADR Institute. And like I said, I'd like to welcome everyone to today's virtual town hall discussion on the importance of trust and security for digital financial inclusion. Today, we will hear from stakeholders from the government and the private sector as they share their insights on the importance of the said topic and how to move forward towards digital financial inclusion for Filipinos, but also for the banks. I think the Philippine banks that are just now have been forced to really jump into this world of digital banking. To formally open today's event, may I please introduce the president of Strat-Based ADR Institute, Professor Dindo Manhit, for his opening remarks. Professor Manhit, the floor is yours.
Morning, Paco. Thank you to all our participants, speakers. We appreciate finding time to join us. We saw the success of our initial virtual roundtable, other part of last year, and we're happy to host another discussion, and now more specifically focused on the importance of trust and security for digital financial inclusion. When the pandemic hit us last year, our own research and intelligence team, part of the Strat-Based group, started tracking what we consider as 8 pandemic risks. And it goes from governance issues, challenges to the economy, especially the inequality, even the idea of having a green economic recovery, looking even at trade and investment issues affecting pandemic. But something that we really focused on also last year that we continue to track. And through our Albert Rosario Institute, we try to push on the research side is the idea of addressing digital divide. There's a lot of opportunity to use the challenges of the pandemic and turn this risk of digital divide and turn it into really a strong initiative for digital transformation. And as we see government data, we have noticed how we continue to be challenged by the lockdown, the long lockdown that we've had, and even by the economic consequences that it has really brought about. Even comparing where we are to our Southeast Asian countries, we tracked it quarterly and even at the end of the year, comparing it to a broader set, which is neighbors in the East Asian countries. You saw how it's been challenging economically for the Philippines. But we see these challenges, some would say economic risk, as an opportunity maybe to do a reset. And I took note of a statement done by dear Governor Benjamin Jokno, where he said, I think in the press conference, as we move towards cashless and coinless society, the BSP remains committed to ensuring that no Filipino is left behind in its pursuit of inclusive economic growth. And this is one area where in Strat-Based ADR Institute, we continue to advocate. That's why we reacted by issuing a statement on our own, released to our friends in media, whereby Strat-Based ADR Institute calls on the Philippine government to support and prioritize digital transformation by investing in a massive digital infrastructure program that will serve as a foundational long-term national asset. Empowers digitized commercial, health, education, and government ecosystem. And we see a core strength as we track numbers. We see this growing mobile connections through the years, rising internet users, very active social media users vis-a-vis our 110 million population. And we look at it from some of the challenges of financial inclusion. You see possibilities still of growth, a lot of opportunities. And the pandemic can really turn these challenges of digital transformation into an opportunity to create a new ecosystem, to really institutionalize inclusive financial system through the use of digital technology. Because when you look at digital payments, we continue to see its rise through the years. And this recent data that we encountered latter part of February really provides us with an opportunity to see possible growth, opportunities. And I myself, I think families last year saw how we really shifted to some digital payments or harness more of e-commerce as we got locked down. It's an opportunity even for not only citizens, but even SMEs. That's why in one of my commentaries, early part of this year, I call it digital push. And I'd like to end this welcoming remarks by quoting what I wrote then when I said, insofar as digitalization has become a reality of our everyday life, and insofar as the prospects of the new normal have changed how we live, the digital push could be reinforced and actualized into public benefits, not only through public-private collaboration, but with the participation of the whole population as well. And with this, I'd like to welcome you guys again to our virtual roundtable. We hope to contribute to discussions. We hope to contribute to shaping indirectly policy as we share ideas. Again, good morning. Thank you, Paco, for this opportunity to open this forum.
All right, thank you. Thank you, Professor Manhit.
But I need to
Yes, sorry, we have a mic. We have a microphone open. There we go. Okay, it happens. It happens. Thank you, Professor Manhit, for giving us the the context and the background for this virtual town hall discussion today. I'd also like, before I introduce our first speaker, I'd like, please give me a moment just to go over some house rules, like not really house rules, but rather I'd like to encourage the participants to ask questions. We have a Q&A function here in Zoom, and you can just type out your question. You can put who you want to address the question to, and we'll try to get to them later during the open forum, the Q&A portion of the event. So now, yeah, without further ado, I'd actually like to introduce our first speaker for the day. Okay, so our first speaker is from the National Privacy Commission. She's a policy advisor for financial institutions, an attorney for the Policy Review Division, and she's here to enlighten us on data privacy for e-banking. Ladies and gentlemen, let us welcome Attorney Anna Puzon. Attorney Puzon.
Yes. Good morning, everybody. Thank you for having me here. Let me just... Okay, there you go. So I'm here to discuss the importance of trust and security for digital financial inclusion, particularly data privacy for e-banking. Well, most often than not, the National Privacy Commission is often seen as a regulator or an entity that prohibits and inhibits the use of technological advancements relating to personal information. However, this is far from the truth. The NPC is well aware of the developments in data processing systems, especially with the increasing trend of using online financial technologies platform, credit scoring, big data, artificial intelligence, and machine learning processing from online intermediary services such as those used in e-banking and related financial technologies, as you can see in my next slide. So the use of such innovation has enabled the finance sector, as well as other industries, to tailor fit its products and services, making them more capable of providing a wide array of products and services to a greater number of customers. As an example, nowadays, obtaining loans are much more convenient, faster, and easier because of the increase in the number of online lending providers. Thus, in just a click of a finger, one can easily obtain loan to finance the acquisition of goods or services or provide capital to small and medium entrepreneurs. This in turn helps spur consumer spending and in effect helps boost the economy. From the beginning, the Commission has not shied away in exploring and supporting emerging technologies that would bring about a robust and sustainable economy. However, such innovation may prove to be both boon and bane for the reason that while progress and development is assured, it likewise presents risks to the freedoms and privacy of the individuals availing of such services when the same is left unbridled and unchecked. Among the data privacy issues encountered when utilizing digital technologies includes capturing data, data storage, transfer of data, and retention of the same. Because of these issues, personal information controllers are reminded to uphold the data subject's rights at all times, particularly their right to information and access, by implementing policies to address the concerns of data subjects and providing all the necessary information to them, including the fact that their personal information will be used for different processing activities, such as for profiling, automated processing, or whenever their information will be utilized for further processing. Next slide, please. The Commission is aware that various emerging technologies are increasingly being utilized. The emergence of such digital technologies and platforms is indeed a welcome development. However, the Commission likewise remains committed in championing the rights of individuals against those who will fail to counterbalance the benefits of these technologies over the rights and liberties of the data subjects. Banks, other financial institutions, as well as fintechs must bear in mind that they are personal information controllers and are required to comply with the relevant provisions of the Data Privacy Act, including, among others, processing personal information within the requirements of Section 4, 12, or 13 of the Data Privacy Act, including the adherence to general data privacy principles of transparency, legitimate purpose, and proportionality, as well as upholding data subject rights. Proper safeguards must also be put in place whenever processing of personal data is outsourced or subcontracted to a third-party service provider. Next slide, please. Likewise, financial institutions and fintechs must take into account Section 20 of the DPA and implement reasonable and appropriate organizational, physical, and technical measures intended for the protection of personal information against any accidental or unlawful destruction, alteration, and disclosure, as well as against any other unlawful processing and exposure to unnecessary risks. In the implementation of appropriate security measures, PICs must take into consideration the nature of the personal information to be protected, the risks presented by the processing, the size of the organization, and the complexity of its operation, and the current data privacy best practices and the cost of securing such implementation. Next slide, please. Among the things that financial institutions and fintechs may consider are the following. First, the possibility of phishing. Timely notification or reporting of phishing emails or spoofed banking websites to data subjects and to relevant authorities must be done for immediate takedown. Second, improvement of fraud detection mechanisms. PICs should regularly monitor accounts for suspicious activities by checking if transactions exceed an established threshold. Third, a PIC may consider implementing multi-factor authentication. This is not only to ensure, but to reinforce whatever security measures has already been initially established. Fourth, a PAC may ramp up compliance to local regulations and international standards. Banks, financial intermediaries, fintechs, and their service providers must ensure compliance to BSP and NPC regulations, as well as ensuring compliance to relevant standards which may be available to the financial industries and adopting as best practice various digital initiatives. This may include, among others, taking note of NPC Circular Number 2020-01 or the guidelines in the processing of personal data for loan-related transactions, and the Anti-Money Laundering's IRR and BSP circulars in the use of information communications technology in the conduct of face-to-face interview, including the use of artificial intelligence. Also with BSP Memorandum 2018-21 or the Anti-Money Laundering Due Diligence on Retail Payment Systems, among others. There are also various ISO like the Privacy Framework or the Code of Practice for Personally Identifiable Information Protection and Privacy Information Management Requirements and Guidelines. Fifth, PICs must take into consideration proactively addressing risks. This includes conducting privacy impact assessments and having in place a disaster recovery plan. Six, PICs may also consider using user-side controls. This is applying features in the banking web and mobile applications where a user can activate or deactivate one's debit or credit account. So indeed, digitalization has not only broken boundaries, it has likewise caused the blurring of the lines in how the financial industry offer and provide their products and services. Nowadays, it is common to offer not only financial products, but all other allied services it deems appropriate. However, such practice entails further processing of information to which the data subjects must be apprised, since further processing of personal data may be allowed, provided it is compatible with the primary purpose. However, if the purpose is no longer compatible to the primary purpose, personal information controllers must ensure that such processing is based on a separate lawful criterion. Online intermediary service providers must also consider that the technologies they are now offering makes their products and services more accessible to vulnerable groups. This necessitates the Commission to wield a more stringent approach to ensure that the rights of the vulnerable sector is not taken advantage and avoid the possible disequilibrium this may ensue. In introducing innovation, the financial industry may experience pushbacks and doubts from their consumers, especially those that were previously underserved. It is in this case that personal information controllers are mandated to practice transparency at all times. This can be done by providing an explanation in plain language as to why data is being collected and for which purposes the same shall be utilized. By doing so, the possibility of encountering data breach is lessened, which in turn avoids financial and reputational risk. However, the Commission's role does not stop in imposing such guidelines because merely regulating an emerging technology will only stunt its development, rendering it impossible to bring about the growth and development our country aspires. Thus, the Commission likewise works as an enabler, working hand in hand with financial institutions, online intermediary service providers, and fintechs through capacity development and interventions to ensure that their processes, operations, and information communication systems are secured and protected and at par with the data security standards set across the globe. As consumers shift to digital platforms in the wake of these emerging technologies, next slide please, the Commission encourages industries to adopt the privacy by design approach by embedding privacy into its digital platforms even from the onset. By doing so, data privacy becomes a culture at the organizational level, making it much more easier to adopt process and policy changes. By implementing the privacy by design approach, the design and implementation of procedures and systems must be in accordance with privacy and data protection already at their planning stage and during the whole duration of the processing, notably through the use of privacy enhancing technologies. They should also take appropriate measures against the development and use of technologies which are aimed wholly or partly at the illicit circumvention of technological measures protecting privacy. By doing so, personal information controllers will ensure that privacy risks posed by these technologies are aptly mitigated. Through all of this, personal information controllers are assured that the Commission will ever be present to provide guidance and support to help promote widespread trust, accountability, and responsibility to the financial industry. By doing so, the Commission hopes to guarantee the success of such technologies and innovations, helping national development and spurring the economy. So I give the floor to you now, Sir Paco.
Yes. Thanks, Attorney Anna. So, I think Attorney Anna talked about a lot of interesting things. In particular, uh, I found quite interesting how the NPC recognizes the need to balance, the economic potential of innovative technology with the risks that are associated with it. But most importantly, how the NPC is an enabler and how it works together with the financial institutions and fintechs to address these risks. So, thanks, Attorney Anna. Um, right before we go to I introduce our next speaker, I also just wanted to welcome a lot of our participants today from the banking sector. We have some representatives from RCBC, DBP, Security Bank, UCPB, Union Bank, PNB, BPI, and PS Bank. Um, so welcome. Also, I just wanted to let everybody know that a bit belatedly that we are recording this discussion and that we will be posting it and sharing it on our social media channels so that more people can have access to the ideas that will be exchanged today. So there we go. So with that, I'd like to introduce our next speaker, and he is none other than Mr. Melchor Plabasan, the Director of Technology Risk and Innovation Supervision Department at the Bangko Sentral ng Pilipinas. And he's joining us today to give us an update on the policies for digitization and financial inclusion of the BSP. He's had a decade of experience with the BSP, and we look forward to hearing some of his insights today. Director Plabasan,
Hi,
the floor
good
is yours.
morning. Good morning,
Good
Papa.
morning.
Just
Good
like to
morning.
check if you can see my presentation.
We can go. We can.
Wait. Anyway, thank you so much for inviting me again. It's been a while, and again, you mentioned about our colleagues and friends from the banking industry. Good morning, everyone. It's always nice to be part of strat-based ADR event, and particularly in this event, which is about the importance of trust and security for digital financial inclusion. Indeed, really instilling trust is important for us. I mean, to get more people to use digital financial services. And I would also like to share that I'm sure you are familiar that about the BSP's long-standing thrust on financial inclusion and digitalization, which are, of course, we can say that they are mutually reinforcing. They go hand in hand, supporting or enabling one another. Now, I would like to start my very short presentation with the digital finance service landscape. As of September 30, 2020, there are about 145 financial institutions which are capable of providing digital financial services. In the BSP, we call that EPFS, or Electronic Payment and Financial Services. And even rural, this includes rural banks, electronic money issuers. So a lot of them are already providing um, mobile and internet banking, which have been proven to be what we can call them a tool for survival during this pandemic, during all of this lockdown. And we have seen also that because of the massive shift of consumer preference, we have seen these e-money transactions and BCE transactions skyrocketed during the first three quarter of 2020. So for BCE, it's quite obvious. There was the increase in terms of the volume is minimal, but in terms of the value, it almost quadrupled. I think primarily because of the uh, significant increase in the value of a lot of cryptocurrencies, particularly Bitcoin. But for e-money, it's really the massive shift in consumer preference because, as I mentioned about survival tool uh, I mean these digital financial services. I mean, through this we were able to perform a lot of transactions at the comfort of our home, paying our bills, buying food, add to cart, etc. um, and also in terms of fund transfers, the InstaPay and PesoNet transactions also skyrocketed. As you can see, there was a very, there's exponential growth during 2020, the whole year of 2020, compared to the previous years. And I think the biggest use case still is fund transfer, accounting for 53%. I'm sorry. This is really fund transfer. What I was saying is for e-money transactions, the biggest use case really is fund transfer, which accounts for 53%. And there was also a significant increase in terms of merchant payments for obvious reasons. Now, while a lot of our institutions have already migrated to the cloud environment, we noticed that as of September 30, more than, 20 institutions have already migrated their core banking to the cloud. So, and a lot of them are small to medium-sized institutions, rural banks and thrift banks, because for them, they have realized that going to the cloud is inevitable. It's really the first step to their digital transformation journey. And we are expecting more institutions to migrate their core banking to the cloud environment, particularly because offering digital financial services would not be possible in their legacy applications, right? It has to be through modern core banking system, which for them the most affordable, reachable thing to do is to move to the cloud. Now, and given all of these developments, given that we have, as mentioned by Paco and as mentioned by some of our colleagues, that really this pandemic has become the imperative or impetus for everyone to go digital. No? Going digital right now is not just a matter of convenience. It has become a matter of necessity. And for the BSP, we would like to sustain that momentum. And for us, that's why we crafted this, what we call the Digital Payments Transformation Roadmap 2023. So essentially, we have identified what are some of the other digital payment streams. I mean, use cases. These refer to use cases that we can harness to further expand the use of digital financial services. Dindo mentioned about the needed improvements in terms of digital finance infrastructure. We are also looking at that, and important also is digital governance, data governance, which was mentioned by Attorney Puson. And aside from all of this, I will discuss in succeeding slides some of the policy reforms which are considered as key enablers of this roadmap. And of course, it's not just about the BSP, it's also collaborating with the industry players. It's also collaborating with the other government agencies, particularly in digitizing payments government to people and people to government payment. And also, it is also about the digital transformation of the BSP. We also need to digitally transform. It also talks about communication plan. How do we ensure that, that's why we have a lot of initiatives focusing on consumer education, digital literacy, because it is also, given the rising incidents of phishing and other frauds and scams, it is also important that we ensure that the public is prepared going to the digital economy. They know how to protect their information. They know how to uh, protect their digital identity. Now, there are some prerequisites in this particular roadmap. I mentioned about responsible use of data so that the financial service providers are able to provide responsive I mean financial services that are responsive to the to the needs of our clients. So again it tackles on the data privacy concern that was mentioned by Attorney Puson. Um, One of the key enablers also is that's why we are fully supporting PhilSys enabled KYC. We feel that this will ensure seamless onboarding and validation of the identity of Filipino citizens. I mentioned about digital transformation of the BSP. It's ongoing right now. We are migrating to a modern RTGS, which will also ensure stability of and the efficiency of payment systems in the Philippines. Ultimately, the objective of this roadmap is to transition 50% of our retail payments to digital and to ensure that 70% of adult population has access to a transaction account, digital account, which they can use for their day-to-day transaction. Now, I mentioned about some of the policy reforms which we consider as key enablers of this roadmap. I want to share some of these initiatives. Most of these are already completed, right? So we have technology aided KYC. Because of this, most of our Filipino citizens were able to open their accounts at the comfort of their home. We have NRPS, which gave birth to InstaPay and PesoNet. We also have the operator of payment system, which gave BSP authority to oversee operators of payment system and designate those that are considered systemically important or prominently important. Within this year, we would right now QR code can be used already for fund transfer, but within this year, we would see expansion of QR code to for merchant payment. So it's not just limited to certain e-money players. You can now use your mobile app to pay for goods and services of course, with QR code. And recently, we just issued the formal guidelines on digital banking. So it's also one of the key enablers. So it provides focused guidelines on the establishment of digital banks in the Philippines. What are the capitalization requirements? How should they operate? So it should be digital end to end. And let's say, what are the expectations when it comes to technology risk management and digital governance, right? Because digital banking um, is really underpinned by robust infrastructure and even digital governance. And recently, we have also issued our virtual asset service provider circular. So it's just amending the existing circular on virtual currency exchange, and it's really more of strengthening the BSP's regulatory handle on virtual asset service providers. And we also need to strengthen our compliance with our FATF obligations. And we are seeing a greater number of jurisdictions right now that are establishing regulatory framework for virtual asset. I think there are close to 30 or 30 to 40 jurisdictions right now that have, which also may contribute to the rising, the growing trust in virtual assets. And of course, some of our pending initiatives or policy reforms, I mentioned about the importance of national ID, which we fully support. We are also amending our electronic money circular, which was published back in 2009, to take into account changes in, let's say, in business model and, of course, even the service providers themselves. We are also one of the key enablers, I think, is really the open finance. In some jurisdictions, it is called open banking, which we hope would also expand the use of innovative digital financial services and would make sure that ensure the efficiency of doing financial services, particularly if you're dealing with multiple financial institutions. And we are also amending our technology outsourcing. While cloud has always been allowed since 2013, we are further relaxing certain rules to ensure that the institutions, especially those that have robust risk management system, can easily transition their operations to the cloud environment. Again, as similar to what our colleague from NPC mentioned, it's always a balancing act between, promoting digitalization, promoting these innovative financial services, but also ensuring that most of the risks that are mentioned here are adequately managed. And how do we, and since the topic of this particular roundtable is instilling trust, how do we instill trust? I think for us to instill trust, it's important that, of course, the digital, the financial service providers should have sound digital governance. When you say sound digital governance, the digital transformation initiative should be consistent with their digital strategy, and it should provide value to their customers and other stakeholders. And it should have top-level support, board and senior management. It's also important to consider cybersecurity and data privacy. I think it's very important that for people to continue to use digital financial services. And these services should not be used for money laundering and terrorist financing and other illicit activities. And of course, financial consumer protection is also key because if something goes wrong, if there's a problem, there should be a defined or structured consumer assistance mechanism. It should also entail consumer education, right? So it's educating the consumer is key, again, as we prepare them to navigate the digital economy. And finally, I think I'm down to my last slide. The changing digital landscape is here and now, and the BSP will always be here to support by ensuring that we have an enabling regulatory environment. And we're actually very excited to see the financial sector take on the power of innovation to improve the lives of our citizens. That's all. Maraming salamat po.
Thank you, Director Pabasad. Yeah, I liked how you ended on your last slide. I actually was going to say that it's quite refreshing to see, a regulator or a regulatory body leading the way in terms of innovation, innovative policies, and like as you've done, asked, hope that it's the industry that catches up. You don't often see it come in that order. So thank you. Thank you, Director Plabasan. Next up, may I please allow me to introduce our third speaker, who is one of the leading information and technology law experts in the Philippines today. He's also a professor of law at the University of Philippines College of Law, Attorney J.J. Decini, and he's here to discuss navigating the regulatory terrain for cloud banking. Ladies and gentlemen, let's welcome Professor J.J. Decini.
Hi, good morning. I know my topic was regulatory and law, but I'm going to deviate a little from that topic.
Sure.
And I'm grateful to Paco and Stratbase ADR for inviting me here today because it made me think about, the topic made me think about many things about the regulations, our practice, even recent events as Director Plabasan is aware that's happening in this space. And so I just like to give some thoughts on trust and security online. So trust is the first time that I guess one of the earliest times that I encountered someone talking about specifically about building trust in an online platform was an interview I'd heard of I believe it was the CTO or one of the founders of Airbnb, where it was important for them to create trust in a platform where participants are basically strangers from each other. And one of the things that they latched on to build trust within the system was the rating system, right? So renters rate lessors in both ways, right? Suppliers rate customers and vice versa. And the ratings then can build trust. If you're renting your space, you can see whether that particular person is trustworthy, has not, had a bad track record with others. And therefore, it uses these ratings as a proxy for reputation. And that's just one way, in relation to many, that trust is created within a platform. And we're moving fast into an era when you think of blockchain. I mean, one of the things about blockchain at its core, supposedly from a computer science mathematics standpoint, blockchain solves what they call what's called the two generals problem. So there are two generals. They both have armies, but they cannot communicate with each other. They're about to attack a common enemy, say in a valley, and they have to move together in order at the same time in order to defeat the enemy. If only one of them moves, then the one that moves will be defeated. And so one of the problems there is trust. If you've agreed, for example, that at 6 a.m. you're going to attack simultaneously as a general, right? You don't know if the other one will act. And if he doesn't act, you're dead. Because it's possible that through the night, that other general might have struck a deal with your enemy. And so that's a trust issue. And in a sense, when moving on to the blockchain era, the word trustless, right? Trustless systems is coming to the fore. And I'd like to suggest that while blockchain does solve that problem, it mutates it into another form. And smart contracts, while they appear to be trustless, actually just shifts the focus in other ways. But moving on to I guess other things. So my first point is about, or my first thought is about information security and privacy. And it's very common that information security professionals confuse this. And maybe in boardrooms, the discussion is focused on information security. And when privacy compliance is discussed, it's information security that is on the fore. I can assure you, and I'm sure Attorney Puzan will agree with me here, that even if you secure your entire network, apply ISO 27001, right, standards to your network, you will not be data privacy compliant, because privacy and information security are related, similar. I like to say that they're two sides of the same coin, but they're different things. The first thing that is different about them is the kind of information that we're talking about. When you're talking about information security, you're talking about all information. So if we were in a ballroom and I say all of the attendees, right, or all of the attendees in this, sorry, maybe here in this webinar, if all of our attendees are pieces of data, then information security basically says who can leave and who cannot leave, right? And of course, it protects against outsiders taking one of the insiders in. So it's about protecting data and saying, who has right to access what data, which speaker has a right to talk to which audience member, and which audience member can speak to other audience members. So it's about access, it's about control, and it's about all kinds of data. Privacy is about personal information only, and personal information is a subset of all information. And personal information only relates to data that relates to an individual, right? So, for example, JJ is male is personal information, or JJ lives in a certain place is personal information. And what privacy asks is, does the company, right, have a right to use that information? Does it have a right to collect, use, and process, store that information? And if it doesn't have that right, then you're not data privacy compliant. So that's as simple as I could put it. So the subset of data is smaller, and the questions that you ask are different. Now, as part of protecting that data, you do need to institute information security. So actually, you could do a data privacy compliance 100%, but not all your data is secure. Because under data privacy law, the only data you need to secure is personal information. So what I'm saying is that, I guess my message is, if an information security, if you enter into a deal, right, where you're trying to get yourself privacy compliant, and it's only an information security assessment, then that won't get you fully compliant with the Data Privacy Act. Okay, next. And this is common, a common problem. Sometimes people think information security is only about hardware. My analogy here is your own home, right? So if you live in a place where security is not that good, you put grills in your windows, grills on your door, you put locks in your gate, you have doorknobs with locks, you have multiple locks, and you say, okay, I'm secure, right? Until your house help allows somebody to enter, right? Who using some social engineering allows somebody to enter, and then suddenly you're in a security situation where you might be being held up, and then all the bars don't mean anything. And what I'm suggesting here is that, and actually Director Plabasan discussed this as well, information security is not just about hardware. Information security is also about governance, right? It's about people, and information security experts like to say that the weakest link in information security are people. And so that's something that you need to consider when you're thinking about information security compliance. It's not just about installing hardware, installing your firewalls. It's about putting sound governance in. And the NPC also requires this, okay? So just that's my takeaway. Don't neglect that aspect. Make sure that when you engage your information security compliance processor, whoever you hire, that they're also thinking about governance and enforcing that governance, because it's the continuous, right, enforcement of this with people that will truly make you secure. Okay, third, right. So legal compliance is only one aspect of trust and security. So when you look at that list that that Director Palbasan showed you earlier about building trust, a lot of that was driven, as you could see, by the regulations that are imposed by the Bangko Sentral and other regulators, right? And that's true, and it's largely protective of consumers. However, we also have to understand, and the BSP is well aware of this, as well as the NPC, that one of the dangers of associated with licensing is that licensing attaches with it an implied endorsement. So right now, I became aware, well, a few days ago, I became aware that an ICO is currently being conducted by it's not clear if it's a Philippine company, but certainly there's a Filipino at the helm. ICOs were very popular in 2017, and that drove the 2017 bull run. But now, so I guess this guy's 4 years late, but he's doing an ICO. And when you read these materials, the first thing he says is that we are a BSP regulated entity or recognized entity. So it's very vague the way he points it out. But what that means is that when he's trying, whoever this person is trying to say that the BSP is endorsing his product, when that might actually not be true. So I think so in that sense, there's that effect, and that has distortionary effects. So regulation has this tendency to place people at ease and therefore put their guard down. And in a sense, while regulation is intended to protect consumers, right, explicitly, it might have this unintended consequence of actually harming consumers. And my favorite example is always deposit insurance. So deposit insurance, fairly uncontroversial in everybody's mind. When this was invented during the Great Depression, FDR, President Roosevelt, was actually against it. And the problem with deposit insurance is that, and the funny thing was that the people who were lobbying for deposit insurance were not the large institutional financial institutions. It was the smaller financial institutions. Now, why is that? Because deposit insurance allows a small financial institution, right, to sidestep having to build a reputation by securing the deposit of the depositor. The depositor doesn't even have to consider whether the management of the bank that he's putting his money in is running the bank properly or within strict guidelines, right? Or with very conservative investment practices. Indeed, when you open a bank account, right now we're living an era of deposit insurance. When you open a bank account, and I've asked a lot of people this, nobody can tell me, right, what is the investment strategy of the bank in which they're, or lending practices of the bank in which they're depositing the money. And the reason they don't care is because of deposit insurance. So in that sense, it's distortionary. This is a product. This is one of very few products where we avail of, but in this case, we're putting our money, where we avail of, where we don't really care about the reputation of the provider. We care about convenience, how many ATMs, how many branches. So the decision is somewhat distorted, and that's what I mean by distortionary effects. And so, having said that, I do see that, I guess my point is that regulations have this way of providing some imprimatur. And I have to say that the BSP has done a good job in weeding out potentially bad actors in the licensing process. And Mr. Prabasan is very well aware of how that is an important aspect of licensing within BSP. I just want to point that out there in terms of the tendency of law and regulation, right, to become a source of trust. Compliance is one thing, and proof of compliance through a license may have that. And so that's one of the things that we have to watch out for. And lastly, and this is something to do with more recent events, of which Mr. Plablasan is aware, have been reported in the media. When we look at regulatory licensing, as I mentioned, it puts the onus on creating trust and security is placed on the platform provider. As I mentioned earlier, one of the ways that you can build trust in security is by design, such as in the Airbnb example, where, or even, you look at Shopee or Lazada, you trust a provider by, the number of good reviews that they get, such as in Airbnb. So by design, the platform is doing that. On top of that, the platform, by complying with regulatory standards, also creates trust within its and that's okay. And platforms also have their own marketplace rules. They have these rules, that govern how the platform deals with their users, as well as how users deal with each other. And of course, there's always this focus on external bad actors, right? We're trying to protect the participants of a marketplace or participants in an electronic bank, for example, from bad actors who are trying to break into the system. And that's fine, and that's good as well. But I think what's less focused in the discussions are internal bad actors. In other words, the market participants themselves. And I think there's some things to be learned from this based on recent events. So recently, a glitch in an online marketplace resulted in unfunded transactions being processed. And as a result, many individuals were dealing with transactions which were, as I said, unfunded. and therefore legally void. Um, and 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 what happened was, legally there's a, or even I would say morally, there is a duty in, under those circumstances, certainly on the part of the platform, to reverse the transactions in order to maintain the integrity of the system. Because the thing about a marketplace is that one bad transaction, right? It has a ripple effect, because that one bad transaction where nothing was sold, nothing is now sold to 5 people. 5 people will then pass on that asset to non-existent asset to other players, and it escalates very, very quickly. Uh, and so the problem now is, as you're cleaning that up, right? One of the things that you need to look at is sort of the integrity of the market participants themselves. There are the rules, there's the law, there's the complaint mechanisms. But in the end, think of any marketplace or any place where you go to. If you cannot expect your co-participants, your market players, right? You could be selling in a Changge, but if the people walking into the Changge can't be trusted to keep their hands to themselves, if they steal your goods, then it doesn't create trust within the marketplace. So market participants themselves, right, have a duty to each other to maintain integrity, to act fairly with each other. And this is where I have to say that in some instances, not in many instances, I guess, lawyers play a bad role, because we have this notion that, if you have a case against me, file a case and sue me for it. And my sense is that, when it comes to obligations, there's nothing in the law that says that you have to file a case. If you have an obligation, your duty under the law is to perform that obligation without having to require the other party to go to court. And that's not only a legal mandate. I think, I believe, a moral mandate. And this, for me, this is no, this is an analogy for, I guess, many of the things that's wrong in our country, where we adopted as a nation, we adopted a constitution that we didn't write. So it's a format. We have the rules, and we have lawyers who can understand those rules. But for that system of government to work, right, it requires that the actors within that framework have to act within a certain moral framework, or within certain self-constraints. They have to self-constrain themselves. And this is why presidential forms of government across the world have failed, and has only been successful, I think, well, if you can call it successful, of course, in the US. And that's why parliamentary system is more successful in other places, because the president is so strong. So that's structure. It's in the rules. We understand the rules. But in the end, if market participants, if participants in a structured environment don't act within self constraints, or don't have self constraints, then it's bad for the marketplace as well, and bad overall for all participants. So I think I'd like to draw focus on that part as well. That trust and security in these kinds of environments, it's a shared responsibility. It's not only on the platform, but it's also on the participants. And that's my last slide. Thank you.
Okay, thanks, Professor JJ. Yeah, we really appreciate how you've challenged a lot of the ideas and the ways that we understand them related to digital banking, information security, and making these ideas digestible through your on-point examples. But at the same time, I appreciate how you ended with the shared responsibility point, because actually it's very much in line with the institution's advocacy for the whole of society approach to addressing our challenges. That indeed, it's not just government, it's not just the business sector, it's also users themselves and citizens themselves that have to play a role in addressing our society's issues. So thank you, Prof. Next up, we actually have a couple of speakers here coming up. So our last speakers are here to talk about making the cloud banking ecosystem safe and compliant. We have a couple of international experts on cybersecurity risk management from Blue Voyant, Mr. Milan Patel and Mr. Mika Heaton. So with that, I just like to turn the floor over to Milan and Mika. Hi, good afternoon, good evening.
Thank you so much for having us, and excited to be here. My name is Milan Patel. I am the Global Head of Managed Services at Bluepoint, a global cybersecurity company. And with me is one of our senior cloud security experts. Today, we're going to talk a little bit about our company. We're going to talk a little bit about the threats that we're seeing today as organizations migrate to the cloud. And we're going to talk about the lens through security and what organizations should be doing through the Microsoft lens, specifically in the Azure cloud and all the governance and security capabilities natively brought through the cloud, as well as through specific Microsoft products. There are lots of other products in the marketplace in AWS and in Google Cloud, but today we thought to paint a cohesive picture and for the purposes of highlighting technologies and processes, we thought it'd be easier to talk about an inclusive solution rather than trying to talk about multiple solutions across multiple clouds. So I'm going to jump right in. Bluepoint is a global cybersecurity company. We have offices in Manila, New York City, where we're headquartered, near Washington, D.C., San Francisco, London, and we're expanding in Latin America as well as Southeast Asia. We were founded in 2017 by a core group of Wall Street bankers and former government officials. I spent a number of years at the FBI conducting cybercrime investigations as a field agent, and then the chief technology officer of the FBI Cyber Division. Among the senior leadership team at the company and the co-founders, we've got folks from the National Security Agency and other organizations like that in Israel as well as in United Kingdom. We're a full service organization in terms of cybersecurity. And I'm going to weave in some of these conversations, not as a sales conversation, but as things you should be thinking about when it comes to cloud security and it comes to protecting your customers, your brand, your capability of detecting insider threats, external hackers trying to get into your infrastructure, whether it's on premises or in the cloud or some hybrid combination. First and foremost, you need the ability to be able to detect events inside your network and in the cloud, what we call detection and response, the ability to look for bad things, decipher what they are, and then apply a corrective action to it. Secondly, you need a plan. You need either an outside expert or an internal team to be drafting an incident response plan. What is it going to look like if something happens to us? What are the processes in place? Who has the command over the incident? How do you engage outside counsel? How do you engage internal security resources? Is a very important topic for most organizations. Today, we work with roughly 250 banking organizations globally, some multinational banks, all the way down to small rural organizations with 20 employees. Believe it or not, the problems are the same. How do you protect your infrastructure? How do you protect your brand? How do you protect your customers accessing your brand? All of those are potential avenues of threat and a vector of attack against an organization. And unlike other sectors, the banking sector has something really concrete bad guys want, access to money. There are lots of other organizations and other sectors can be targeted, and in fact, they are targeted at a very high rate. But the banking sector, generates a lot of risk from just the things that it does, servicing customers. You've got to have the ability to do adequate threat detection, both internally, but as well as protecting your brand externally. Are bad guys trying to commandeer your website or launch a lookalike website in order to get your customers to go to a website that looks like yours but is not? Taking down fictitious and fraudulent domains for spear phishing and credential harvesting. How do you identify those domains? What tools do you have at your disposal to go into the deep and dark web and other places on the internet to find these things and shut them down? And finally, understanding your external risk from a third-party risk or supply chain risk. I'm sure now the entire world has heard about the SolarWinds breach that predominantly impacted organizations running the SolarWinds appliance and capability. And that is a supply chain risk, a good example of understanding who you're working with, what access they have inside your environment, what data are they exchanging with you, and how are they protecting themselves in the space of the sort of the global cyber threat. And I would argue here, we used to operate in a model of you can hide in the herd, or you can sort of evade bad guys by being obscure inside of this herd. And the reality is that the bad guys that are looking to make money are getting really, really sophisticated. Most cybercrime organizations globally are organized. They're organized cybercrime, meaning there is a structure through the organization. There is communications folks, marketing folks, tech support folks. Believe it or not, if you get hit with ransomware, you can actually go to the bad guys in the dark web, exchange messages with them on a forum, and you can work with them to unlock your computers after you've paid them. It is customer service at its finest, and they're very professional. They will tell you that they're not going to come back if you pay. And so we see this explosion happening. The broadening of cybercrime activity globally has us on edge because we have to be able to keep up. We're going to talk about some use cases here, specifically around the banking sector, core technologies, that we're seeing customers deploy globally in relation to moving to the cloud and then protecting those cloud workloads, meaning the content you put in the cloud, how is it protected? It's not as easy as it used to be, which is you could deploy good antivirus or a managed service to take care of the computers within your enterprise, within what I call your four walls. Today, we're working from home. We've got remote operations. Some people will never come back to the office. The broadening of that attack surface has been multiplied as organizations are quickly moving to the cloud because of COVID. And that we expect to continue to grow at a very, very fast pace. And when you start thinking about protecting your cloud and your services in the cloud, we're not just talking about bad guys getting in. We're talking about launching a cloud service, but having a very, very slight misconfiguration in your AWS or Azure or Google Cloud instance, where somebody can come by and sort of drive by and get access to data. If you recall, the Capital One breach a few years ago was actually not an intrusion. It wasn't a hack. It was a misconfiguration of a bucket in the cloud that somebody got access to without actually having to hack anything. And so we're seeing a lot of those demands grow as organizations are trying to figure out how to secure the journey to the cloud. And when they're in the cloud, how to do it wisely with the right architecture that is sort of foundationally setting up you for success versus just trying to move this there quickly and not having the right tools in place and the right policies in place to manage that. So I'm going to turn it over to our cloud expert, Micah Heaton, who's going to go over some thoughts and comments on this journey, and hopefully we can save some time for some questions.
Hey, thank you, Milan, for that gracious introduction. As you can see, I'm working from the car. I apologize, I've lost some sunlight in the North American Northwest, actually, but I'm thrilled at the opportunity to be here. And some of my favorite topics have been discussed today. I am not readily going to forget Professor Tassini's analogy about the generals satisfying the blockchain ledger. That's one that I'm going to remember. I'll probably use that. But digital governance is something that I want to talk about. We've been discussing in a little bit more theoretical terms. So I think Milan and I want to focus on how does this stuff actually work? As you see an explosion of digital financial services migrating to the cloud, what does it actually mean to protect our organizations and protect ourselves? So as you can see, I'm working from the car. This is the world that we live in now. I've got a laptop and I've got two phones in here, and we need to be able to see and access data as an organization at the information, the data device, and the identity layer. So that's really what we're going to talk about. We just want to kind of focus on the analogy of the cloud, as Milan was saying. We used to have kind of a moat around a castle, and that was our perimeter fencing. And now what we're really dealing with is needing to extend that perimeter out into the cloud to secure essentially mobile devices. And I really like Attorney Anna's use cases. She gave us about 6 scenarios to look for in terms of implementing kind of a good strategy. And I want to weave those into the conversation. Go ahead and advance, Milan. The reason we like to focus on Microsoft right now, at least in terms of this conversation, is because I feel like a really good approach to a mature cloud security posture is to take into consideration that foundational layer of identity and then prop up our device and our data layers on top of that. And Microsoft puts at our disposal the opportunity to leverage the identity provider in Active Directory and Azure, as well as the operating system in Windows, which we're all beholden to on some level, whether commercially or personally. And they also have the productivity and collaboration environment in Office 365. So that gives us a really unique opportunity to combine all of the things that we need to drive successful outcomes. And what we're seeing is an explosion of intelligence data and threat signals. If you take anything away from our quick little slide presentation here, it's that 8T. I want you to circle and star that. That's the amount of data that Microsoft is harvesting, not weekly, monthly, yearly, but daily. That's threat intelligence signals that are baselining normalization, how we interact with our devices, the browsers that we use, the applications, and where we do all of those things from, so that the system can kind of start to detect what's a normal use case for those of us when we're interacting with these platforms. That way, a service provider like us can start to detect and alert on departures from what's normal. And I want to give everybody a little bit of peace of mind. It's been discussed today that moving into the cloud and kind of taking on some of these additional responsibilities for ourselves and organizations is a little bit overwhelming. There is absolutely no pride lost whatsoever in reaching out to a trusted advisor. In fact, I'd say it's probably better for you to reach out to a trusted advisor that has both the theoretical, academic, as well as operational expertise to really deploy these things in the wild and help accelerate your organizations into full-scale adoption. Go ahead and advance, Milan. Go ahead again. Something else that we've seen in the financial institutions in particular is we've got all of these considerations. These 5 areas that Gartner evaluates are things that Microsoft is currently leading in. So the opportunity for you to kind of embrace a full spectrum solution from Microsoft is a really good investment. If we're just looking at basically maximizing utility in our singular investments, then an opportunity for you to do that across these 5 areas, which all relate to the way that we secure our identity, data, and devices in the cloud, is pretty important. We've got some source material at the bottom. I think if you follow up after and ask for the slide deck, we can certainly get it to you. Go ahead and advance. So if we're talking about the opportunity, I think data, digital governance was mentioned, but also Professor Decini was talking about information protection and how privacy is not necessarily the same as InfoSec, but they're 2 sides of the same coin. And Attorney Anna was also talking about putting things in place like multi-factor authentication. These are things that are relevant, not just on the individual devices that we're on, but also extending out to the SaaS and platforms that we use in the cloud. We need to ensure that every time we're accessing data, there's some kind of encryption at play at rest, as well as encryption over the wire. So maybe we're just transferring it, from one bucket to another, as Milan was talking about. Maybe we're actually emailing it to a colleague or even a client. But anytime we exchange information, we need to be sure and have the confidence to know that the data is properly encrypted. And in this space in particular, we're really beholden to a lot.
Is it just me?
Dramatic value that MSSP
There we
can
go.
provide.
He's back.
Did I drop?
You did for about 5 seconds.
Yeah.
Okay. Sorry.
Go off video.
We'll speed it up a little bit. So we look for opportunities to kind of templatize our programmatic compliance because we have regulatory agencies that are where we're beholden to that kind of encryption. So that's where you would look to a trusted advisor like BlueVoyant, a security provider, to help you bring your organization up to speed quickly. One of the biggest mistakes that we could make, and a really important pitfall to avoid, is if we just lift and shift our entire environment or applications to the cloud without actually considering what those security containers should look like. Go ahead and advance more. The other thing to consider is Microsoft looks for opportunities to integrate with third-party solutions as much as possible. So if you are entrenched on a particular technology, a file repository surface like Box or Dropbox, you've got an opportunity to integrate the security solutions of thousands of these cloud applications that we're all using and bring them under some kind of governance. There's not very good excuses these days to ignore opportunities to do that, where we can then leverage these compliance and controls for our finance organizations. Go ahead and advance. At the layer of information, we want to be able to track the life cycle of information from its genesis, as it's created, as it's emailed, and as it's moved throughout an organization. We want to be able to classify it. I think if we've worked in finance, if we've worked in HR, we've worked in legal, especially those attorneys on the call with us, they're probably dealing with file repositories that have 10 years worth of data that haven't actually been classified. And as you've got iterations of technical staff, they just move the data from one server to the next as you continue to kind of migrate into another data center or a co-location. What we really want to do is take stock of all of the data that is under our purview and start to classify it so that we can kind of programmatically encrypt it and provide flexible permission sets to only the folks who should be able to see it, manipulate it, edit it. And then where a trusted advisor like BlueVoyant comes in is actually on that 4th place. So go ahead and advance, Milan. This is an area that might be a little bit difficult for organizations, which is to monitor the kind of the traffic against these sorts of violations of compliance policies. So we've talked about the theory of standing up kind of institutional governance, but then actually putting in place enforcement mechanisms where we can see evil, so to speak, or as Milan said, bad things happening in an environment at 2 a.m. is where you want to put in a kind of monitoring apparatus. So the first 3 things are hugely important for defining what your internal posture and policies are, but being able to capture that traffic and then generate action or manual touch points for our organizations is really important. And that's kind of part of our case study today, is the opportunity to kind of build out an action plan. So that's everything that Attorney Anna mentioned, those 6 points. I want to put that right at the bottom of those 6 points. Point number 7 is we want to be able to monitor violations of those previous kind of 6 concepts. Go ahead, Milan. I'm actually, yeah, this will probably be the last slide, Milan. I think we'll wrap it up here. These are specifically the kinds of things that we want to see. How does this actually work in the wild? When we're monitoring something, we want to see policy violations. Is somebody not actually satisfying an MFA requirement, like Attorney Anna was saying? Did we have 2-factor authentication enabled, but it wasn't enforced, meaning somebody was still able to get through without actually satisfying the 2-factor authentication? Or is somebody moving a document across the organization over the chat or communication platform that has hundreds of personally identifying information numbers on it? That's the kind of thing that you want to be able to detect in your organization, not just as the data that's rest and it's living in Dropbox or Box or G Suite or even in SharePoint. You want to be able to classify it as it's at rest, but also as it's moving throughout the organization across email or really just your network file transfer. These are just kind of some take-home things to consider as you're looking for anomalous activity in your organization. Go ahead, Milan. Again, just kind of reiterating the point that the opportunity from the Microsoft perspective really gives you the leverage to see all of these things, both at the operating system level, on the device itself, but also where your individual identity is accessing data in the cloud, productivity, and collaboration environments as well. Being able to track authentications for your personal user against information, regardless of where it is huge. That's the difference maker. That's the real differentiator between knowing that you're secure and hoping that you're secure. And I think we'll wrap it up there, Milan. And anything else that you want to add, and certainly open it up to questions or hand it back to Paco. Thank you.
Thanks so much, Micah. And again, appreciate your time, folks, to talk a little bit about how we see security. I think one thing I will mention is, I've been doing incident response and cybersecurity for almost 2 decades, and very close to the U.S. banking sector in the early 2000s as they began to digitize. The exponential increase in cybercrime against the big banks on Wall Street was a wake-up call for Wall Street. And since then, those larger organizations have spent billions of dollars securing their infrastructure in the cloud and on-prem. Some of the largest banks in the world are spending upwards of $400 million just on cybersecurity, not IT security, cybersecurity. And where does that leave everybody else? If Citibank has put up huge walls around their infrastructure where bad guys can't get in? Well, there's two realities. Number one is the bad guys know that, and they know that the return on investment to go after Citibank is just not what it used to be, and so they go after smaller banks. And as the rest of the globe is catching up to some of the digitization that Wall Street went through 10 years ago, the bad guys have realized there's more money to be made as those countries and other sort of Wall Streets, in quotes, in other countries are becoming digitized. And so the one thing I can leave you with is I've seen it globally spread from Wall Street to every major economic region where they've become digitized, and cybercrime has increased both in country with hackers inside the country and hackers externally in other countries targeting those organizations in those countries, trying to get into the organizations because they know that there is still a growing maturity around cybersecurity. And so I would leave you with that as something to think about as a sort of existential conversation versus just sort of, buying some tools and trying to protect, some data. It's bigger than that. Thank you guys so much for your time.
So yeah, thanks Milan and Micah for sharing some of your insights. In particular, we appreciate how you guys Blue Voyant implement in telling us how you implement information protection solutions to create that that trust and security in the cloud that we really need these days. And I think it's nice that we got your insights as well, because earlier we had some insight from the data regulator, from the banking sector, some policy insight, and now it's nice to hear from the practitioners, the industry, the security information industry itself. So thanks. At this point in the program, I would like to shift over to and open the floor for some questions. So again, I'd like to invite our participants to send in their questions through the Q&A function of the Zoom webinar, or if you're not comfortable, you could just direct message either me or one of the members of our team. So I'll give the participants a second to do that. We already actually have a couple in here, and I have a few more that have directly messaged me. So let me just pull these ones up. All right. So, okay, so the first one actually it's for Director Plabasan. And perhaps Director Plabasan was expecting that he would have a lot of questions this morning. But Director Plabasan, you mentioned earlier about how a lot of the banks that have gone to the cloud have been rural banks and thrift banks, and maybe only now are we seeing some of the bigger banks do the same. And we have a question that given the pandemic, what are the transitional challenges that you're anticipating in terms of moving from on-prem to the cloud?
Yeah. Yes, Paco.
Sure.
Can you hear me?
Yes, we can hear you, Paul.
Yeah, as I mentioned, a lot of supervised institutions right now are actually rethinking their business and operational model that will be suitable in this new economy arrangement. No, so what we have seen so far in terms of the challenges, the first one I think is really migrating legacy applications to be cloud ready, because a lot of the institutions, especially those that have really invested heavily on legacy application, it will be a challenge for them. I think another area is really retooling the skills of in-house IT personnel to support cloud-based applications. So fortunately, we have seen a lot of institutions that have, I think, well-planned and executed cloud transition strategy, which made it a lot easier for them to really move to the cloud.
Okay, thanks, Director Mel. There are a couple more, several here for you, but I'll try to merge them as best I can. So we have here a question. It's about BSP's information protection requirements. So first of all, you mentioned earlier the training of workers. So they have a question here. When the BSP enforces security or information protection requirements, do they talk about information workers of the bank or also the front line workers?
Yeah. So when we speak about information security risk management systems of supervised entities, it means so it covers all parties having access to the information asset of the institution. So it's not just only the information workers, it's also the frontline workers. It's also about the access of employees, third party service providers, and even the corporate and retail clients. That's why those that are familiar with BSP Circular 982, I know a lot of the attendees here are use 982 as their Bible. So the responsibility and accountability for information spans the entire organization. And it's usually premised on the principle of shared responsibility. It's a shared responsibility model.
And again, I have one more directly just for Director Plabasan. What are the minimum BSP information protection requirements?
Yeah.
Does that make sense? Yeah.
Yeah. I think, again, as I mentioned, those that are familiar with Circular 982, so it provides the detailed guidelines on establishing comprehensive information security programs of supervised entities. So there's one section there dedicated for data security. So essentially it prescribes the minimum security controls and processes to protect information all throughout its cycle. So when we say all throughout its cycle, so it's from storage, from data handling, transmission, and up to the disposal phase. So again, it's premised that on the principle that it should be risk-based. When we say risk-based, a risk assessment should be done, and then the security controls that will be implemented will depend on the risk assessment. Let's say highly confidential information or PII, personally identifiable information, should have more stringent security controls like encryption, multi-factor authentication, data leak prevention systems, compared to, let's say, information that are readily available in the website. So the regulations are pretty comprehensive when it comes to information protection requirements.
All right. Thank you, Director Plabasan. So to give you a break a bit, I'll segue a bit to our other speakers. But you please feel free to chime in, especially for this next question, which maybe Professor JJ and Attorney Anna would like to answer, to address. And it kind of puts our speakers from the NPC and the BSP on the spot, though. But the question is, do you see the need for any policy realignments vis-a-vis the Data Privacy Act of 2012 and its enforcement to banks? So any of our speakers that want to answer? Yeah. Attorney Anna?
I'll answer that because I'm from the policy review division.
Thanks.
Yes. Do we see any need for any policy realignment? Well, actually, we're taking into consideration the various developments in the digital technology platform. And the NPC is also actively participating in various international fronts like the Council of Europe. So we are abreast with the developments in the digital technology platforms also that is happening abroad. So with that, we take the initiative to actually polish and assess the current policies that we have, and every now and then we issue policies that would amend or improve the guidelines and the policies that we have right now. So it's a continuous development of policies. And so our stakeholders are assured that we will always be at par, if not among the best when it comes to data privacy.
Thanks, Attorney Anna. Professor JJ, did you want to
Yeah,
weigh in, or
well,
could?
I think there was there's an amendment now to the Data Privacy Act where the NTC is proposing that financial information be considered sensitive personal information. I'm not sure I completely agree with that. I think one of the most damaging laws we have in the books right now is deposit secrecy law, because it has a lot of unintended consequences, and that is a privacy law, right? And I'll give you an example of how bad it is. I know someone who was victimized by an online scammer, and deposited the money in a certain account in this number, and we contacted the bank to say, because it had already just been deposited and the money might still be there. We asked them to freeze the account, and of course the bank comes back and says, under the deposit secrecy law, we're not even allowed to confirm the existence of the account. So that kind of level of secrecy, in effect, and this is interesting. What's interesting here is that we pointed them to online sources as early as like maybe a couple of years ago, where people were already saying this particular bank account, this particular payee, these are scammers, and I lost this much money. So there's publicly available information for them to confirm that there's some problem that's going on here. And I think that that area needs to be re-examined, in particular in relation to money laundering, because the money laundering law says that mere possession of funds that are the proceeds of an unlawful activity, in this case, estafa or predicate crime, is itself money laundering. So I hope that some leeway could be made, maybe through the Bangko Central, to realign the compliance obligations situations where people are being victimized and using bank accounts to victimize others. Thank you.
Ako, can I chime in?
Sure thing po.
I agree with JJ. I think for the longest time we have been working on amending the 1405. It's because it also impedes on a lot, even on our supervisory function, right? So there is an ongoing initiative, and we're rushing this. I have initially discussed this with our friend Mon Liboro. So essentially what we want to do right now is to facilitate information sharing subject to data privacy and confidentiality rules that would make sharing of information, particularly those that committed fraud and scam. I mean, because the best way to one of the best ways to curtail this is really to send people to jail. And we cannot send people to jail if, let's say, the receiving institution would not share information about the identity of the client that was used as a mule account. So I think for that particular purpose, there's I think I may have to consult JJ as well. There's some elbow room with respect to sharing information to ensure that mule accounts in particular can be investigated and prosecuted.
Great. Yeah, thank you. This reminds me actually I remember reading in the news a few years ago that there was a government official, and I'll not name the government official, that allegedly had this secret bank account, and the banks couldn't confirm or deny of its existence. So somebody tried to deposit a small amount into the account just to confirm that it existed, and the deposit went in. So that's that's interesting, and I like that. Definitely, they should look into that law, the bank secrecy law. All right, so I actually have another question here for Professor Decini, and it's actually pertains to something he discussed earlier about the bad actors, the internal bad actors, and in particular, how can banks, or how should banks rather, address these internal bad actors?
Okay. So there's actually case law experience on this, and famous examples. I believe that maybe way before you were born, Paco. Certainly, I remember I was young. Maybe I don't know. So there was an individual to whom a bank had erroneously transferred. But I think the instruction was supposed to be only for 1 million pesos. Instead, he received $1 million. And I say there's case law because that's an example where obviously he had to return the money. But look what happened, right? He required the bank to sue him all the way to the Supreme Court just to get that money. And this is where I think lawyers should really understand what their role is, right? It's not just a question of, because it's so easy for lawyers to say, just sue me and I think that's the wrong attitude for lawyers to take. I think the lawyers should encourage their clients to do the right thing. So when you talk about bad actors, banks have had experience in this already internal, and some people have returned it. I'm reminded of the Bangladesh. That was a glitch in a sense. It wasn't a glitch in the SWIFT system, but it was a glitch in the internal processes within the Bangladesh bank. And the money ended up in the Philippines. And there was somebody, I forget his name, but he was the casino tour operator in one of the casinos, no. And he received some of the money. I believe it was $10 million or something to that order. And he went to the BSP and he returned it. I mean, in his sense is that it's a loss to them. This is money that was owed to them by somebody else. They were completely innocent, but they figured, this is not an honest way of making money from other people's, other people who are victimized. And I thought that was an act of integrity, and that sort of attitude is, I think, what we should also expect from our users in our system. Because I think if you have users who are like the guy in that earlier example, the $1 million, if people are going to act that way, then it erodes trust in the system itself. Because if those people are there, then I'm not free from mistakes. That may happen, and tao lang naman, sabi nga nila sa Tagalog. We're just people, and people are prone to mistakes, and like software code is also subject to mistakes. All right, thank you.
Thanks, Professor JJ. Now this is my question, really. It hasn't been submitted by anybody, and I'm just personally curious. So earlier, we'd mentioned that I think it was Director Plabasan who mentioned that it was a lot of the rural banks that were that have migrated to the cloud, and it's less of the commercial banks. And I was wondering why you think, anybody really, any of our speakers, why you think it's the rural banks taking the lead and not the commercial banks? And for our speakers from the US, if this is a pattern or a trend that also happened, or that you also see in the US or abroad, where it's the smaller players that are jumping on the innovation bandwagon before the bigger ones.
Yeah. Paco, can I answer that?
Sure thing.
Yeah, I'm sorry if there was a confusion on the earlier presentation. What I mentioned was a lot of rural banks are migrating to the cloud for their core banking system. You know how big core banking systems are. But most of the big banks are also now migrating to the cloud, but they are transitioning first with their non-core systems. So the amount of systems that have been migrated have been significant as well for non-core systems. Because rural banks normally have limited resources. They don't have access to sophisticated, innovative solutions. And the only way for them to have access to these solutions is to use pay-per-use model, which is the cloud-based model. Unlike commercial banks, big banks, they have resources. They can buy all the server or application software that they need to run their operation. So that's it. But surprisingly, a lot of big banks have also been migrating a lot of their processes to the cloud.
I see. Oh, thanks for clarifying that, Director Plabasan. Milan and Micah, if you guys want to weigh in, you'd be welcome.
I think it was covered.
Yeah.
Go ahead, Micah.
Oh, I was just going to say, I think this is generally true that larger organizations and institutions typically have the might and power to drive innovation, but it is typically the case that smaller organizations, and in this case banks, actually are quickening the pace to adoption. And that's usually primarily because their on-premise footprint is smaller. So it's easier for them to leverage these tools in cool, innovative, and adoptive ways, whereas big organizations are tankers that take a long time to turn around.
Sure. Okay, that's clear. Thanks. Thank you. Thanks, Micah. Okay, so yeah. So actually, I have a bunch of questions here. Just trying to pick which one I'll go with next. But we have one here for Attorney Professor Decini. From your engagements with financial institutions, what are the difficulties? What difficulties are you seeing that banks are encountering in digitizing the sector? What is your perception of the current capacity of banks to go to the cloud, considering well-entrenched legacy systems?
Wow, that's a complicated question.
Yes.
So I'm sympathetic. I sympathize with larger organizations with legacy systems because it's not just a technological hurdle to shift your system onto the cloud. It's also there's a human hurdle as well. There's going to be a lot of pushback from your internal IT. I think a lot of tools have already been developed to make that migration much more seamless. But certainly that's the trend. I think what my observations really more stem from that of a customer, and I what I find is that banks with large deposit bases have a tendency to move much more slowly in the realm of e-banking and digital banking, largely because I think they're trying to hold on to their deposit base. So it's not unusual. So I'm signed up with one of these banks. It's not unusual. It's very strange, I think, that they don't allow me to move my money out. I have another account in another bank that is fully digital, and it's easy for me to move money in and out. I get the sense that the larger banks are really being disrupted. That's what I'm seeing, at least on the consumer banking side. I like to say that, the thing about digital transformation, when you start thinking about being customer centric, right, then you're considering what the customer wants. Sadly, I've seen that in many large banks with large customer bases, their idea of innovation for customer service is providing seating in their branches. In other words, go to the branch. You used to stand before, but now we're going to put you in a nice little line, and we're going to have you sit. So we'll just call you, and you just sit there for an hour. I actually tried that one time. I was withdrawing. It took me an hour to withdraw. In my other digital bank, which has branches also, I have never visited it. I have another account with another digital bank that doesn't even have a branch. And it's easier for me from a customer standpoint to do banking. And so what am I saying? I'm saying that this feels like disruption. And if this continues, then I think what we will see is that people will demand much more ease in which they can move money. And what will happen is, I think, for businesses, is that it won't be necessary. So I have a small law office. We have, I think, 4 or 5 bank accounts. And this is because whatever branch is closest to our client. What I hope in the future is I'll only have 1 bank account, maybe 2, right? And then it's easy for us to move money in. It's easy for people to send money to us. And when that happens, the competitive dynamics change. And I think that's something that banks will have to be ready for. And what I'm happy to say that my view of the regulator is that the regulator is nudging everyone along. They're very open to. I think Director Labasa was talking about open banking. These are coming, and they're telling, I think, the bigger banks, ready or not, this is going to happen. We need to nudge you forward, and I think that's good for customers and consumers as well. Thank you.
Thanks, Professor JJ. We have a question here from Q&A for Attorney Puzon. And I don't know if you've read it, Attorney Anna, but it says, does the DPC give accreditation to cloud providers their DPC compliance, or do we have to get a cybersecurity firm to do the compliance review for us?
Mm. Yes, we're currently not accrediting any cloud service providers. But as to the necessity of employing a cybersecurity firm, as I said in my talk a while ago, it would really depend on the complexity of the operation of the organization, as well as the risks that may be posed by the processing of such personal information. And you also have to take into consideration the degree or the size of the firm if it is really necessary for you to employ such cloud security services.
Okay, thanks for addressing that, Attorney Anna. Uh, and then if their speakers are looking at the Q&A, we also have a bunch of questions here about first the VCEs. Like, does anybody want to comment on the recent PDAX incident? Attorney JJ or Director Plabasan, you also have
Yeah.
some questions. Oh yeah, go ahead, Po.
Yeah. I think PDAX, of course, PDAX is a registered virtual currency asset service provider. So they have complied with the reporting requirement. We are in the process because initially the approach has always been, we trust your representation, but we will verify. So we are in the process of verification right now. But the ultimate objective really of the enforcement action from the BSP is really to ensure that the services will be restored as soon as possible time, and all those that have encountered errors will be remediated again as soon as possible time. But yeah, we are doing some sort of investigation just to verify what actually happened. I mean, regarding the unfunded order, and then ultimately resulted in several other transactions. So from other market participants.
Okay, thanks, Director Plabasan. I don't know if you also want to address this one that asks, in light of the data breaches like the recent Cashalo breach, what is the BSP's plan in terms of monitoring and regulating data stored by digital lending companies?
I don't know if it's fortunately or unfortunately, but purely digital lending companies are not within the purview of the BSP. So only those entities that have, let's say, e-money or deposit taking plus lending are covered by the BSP right now. Ashalo, I think, is a registered lending company it's registered with the SEC. So, but essentially in the BSP, I think JJ mentioned about the licensing process to ensure that they have the necessary systems and processes in place, and then going through the regular on-site and off-site supervision. So that essentially somehow addresses the issue of ensuring that that these players are able to protect information of the client. And of course, if they encounter certain breaches, then there are also protocols that should be followed, from reporting to investigation to restitution.
Okay, thanks, Bob. So actually now we're getting to the end of our Q&A portion, but we still do have a few minutes. So I just wanted to go around the table and see if any of our speakers wanted to take a minute to raise any points that maybe we haven't, or wanted to share some last insights before on building trust and security in clouds, in particular cloud banking, right before we close the Q&A. Anybody?
Yeah.
Sure, go ahead, sorry.
Yeah. As my last word, can I just answer one of the questions in the chat box? I think there was
Oh, sure. Did I miss? Okay, go ahead, Pogue, please.
Yeah, there is a question here. Is Bitcoin already recognized in the Philippines, and are service providers already where transactions could be conducted? Thank you. So again, just a clarification. I mentioned about jurisdictions that have adopted regulatory framework for virtual currency before. So the regulation is not meant as an endorsement of virtual asset as a as a store of value, as a legal tender, or as an investment mechanism. The main objective really of BSP in regulating virtual asset providers is really because virtual asset service providers it's an area where the interface between the regulated financial system and virtual assets take place, right? So and you know that the financial system is highly regulated. So we want to make sure that when they interface with the regulated financial system, they also comply with our rules on let's say on cybersecurity, particularly on money laundering. So again, it's not a form of it's not a form of endorsement, but rather it's our way of protecting the regulated financial system.
There's a, yeah,
Go
there's a
ahead.
question here on guaranteed minimum income, which I find very interesting. So my understanding of guaranteed minimum income is all Filipinos will get a guaranteed income. The government will give it to them. And the idea there is that if we get rid of SSS, GSIS, PhilHealth, HTMF, we get rid of all of these social security institutions and the taxes we pay to them, and you turn that money, so you pay taxes at the same rate, but you get that money that you pay to SSS and you divide it among all Filipinos, everybody gets a certain amount of income. And the question here is that if you give everyone income, would that be better than the DSWD's cash, what's that called? The program, right? Yeah, the four-piece program. My view is that they're the same animal in a sense, right? So the thing about giving people money is that you take the middleman out, you remove the inefficiencies of government, and you allow people to spend the money in the way that they think is best for them. I like conditional cash transfers because they may be conditional on things that are beneficial to the less advantaged. For example, getting education for their children, or maybe even making sure that there's sufficient nutrition for their children. So this is a very difficult question, but I think my minimum guaranteed minimum income is not likely to happen. So I think the four-piece is probably the better alternative because you get rid of all of the overpricing, for example, rather than spending this much money on something, chances for graft, for example, it goes directly to the beneficiaries, and beneficiaries are in a better position to make decisions for themselves. Thanks.
Thanks, Turn JJ. Yes.
Let me
Yes, ma'am.
add, with regard to guaranteed minimum income, well, actually, the DSWD's 4-piece program is an example of this. And actually, I am one of the contributors in the recent DSWD's financial literacy launch. So they were able to publish a booklet for the financial literacy of vulnerable sectors or the beneficiaries of the 4Ps. So take into consideration the benefits that the 4Ps brings. It is actually a good basis to or a jumping board for the marginalized sectors to be banked, considering that most of those poor people or vulnerable sectors here in the Philippines are unbanked. So this is a good springboard for them to be able to have knowledge of financial literacy and be able to also know about data privacy issues and concerns that would affect their rights.
Okay.
Can I just add something to that? Just something
Sure.
that came to mind when Attorney Susan mentioned that. My understanding is that for a lot of poor people, the savings rate is negative. In other words, people who, if you're poor and you try to save money, it's impossible because it's easy for other people to have claims on your income. If you're in a depressed community, you probably live with an extended family. So if any other a relative gets sick, if you have some money set aside, you are then sort of obliged, right, to give that money up. In a sense, because there's very little privacy when it comes to cash. If you're a woman, your husband might have a claim on whatever income you earn, and that's why the savings rate is negative for them. One of the things I hope will happen with digital financial inclusion, if it ever happens, in a very broad basis, that once you shift the money in electronic form in devices, then it's easier, I think, for people to save money by hiding it within apps, you can have privacy enhancing apps where if you put in the wrong pin, it will show a different balance. And therefore, it allows people to engage in some sort of savings without the social pressure that leads to negative interest rates. So I'm very hopeful with financial inclusion and using those ways of providing value to poor people, as well as if there is a good, strong digital payment system, it might also enhance credit, right? Extending credit to, say, sari-sari stores and credit to individuals in those places, and maybe remove some of the violence associated with providing credit to individuals at that level. Thanks.
Thanks, Attorney JJ. You know, I'm just about to wrap up, unless Micah and Milan want to give a few parting words.
Milan, you got anything?
I can talk all night about it, but probably not helpful. Thank you so much for your time, folks on the panel, as well as the attendees.
Great. Yeah, I want to also express gratitude. Paco, I think it's so cool that your communities have embraced cryptocurrency. Professor Dicini was talking about how the coin offerings of 2017 created an erosion of trust and a backlash. I think that's very true in the States, but an unfortunate circumstance is that part of financial literacy is understanding how these digital economies work to create encryption models. And then stateside, folks are missing out on that education. So I think it's fantastic that you are embracing that and discussing it and incorporating it in your financial education models.
Yeah, especially Professor JJ Dicini. I mean, we had a call, you know, preparing for this, and he gave me so many tips on how to buy into Bitcoin. So, so let's see what happens.
Don't hold me to it.
Okay, Professor JJ. All right, so you know, at this point, you know, I'd like to thank everybody for attending, all of our speakers, all of our panelists, for sharing their time and expertise with us. You know, we at Strat-based ADRi Institute are happy whenever we get to bring different sectors and different, you know, people from different industries together. Especially this particular event, you know, brought about by the pandemic. We've really seen a shift to online tools and services that we saw last year, and evidence that our future really is digital. You know, as a result of this accelerated digital transformation, bridging the digital divide so that all Filipinos have equal access to these services and opportunities has really elevated in performance. You know, with more businesses and services now in the cloud, one aspect of this divide that must be bridged is that of digital financial inclusion. And that's why I'm really happy that we have all of you here today. You know, late last year, we had a similar event where DG Fonacier of the BSP also shared, you know, a lot of the BSP's, you know, push for digital and for digital financial inclusion, and really appreciate that our government speakers from the Data Privacy Commission and the BSP have again joined us today. Thanks again also for Professor J. Dicini for sharing his insights, and Micah Heaton as well, Micah Heaton and Milan Patel for joining us all the way from the US. So with that, I'd like to thank all of our participants as well. And we'll be sharing the presentations online if you request them, and sharing the video of the discussion rather online through our social media channels. So with that, I'd like to officially close today's discussion, and thank you, and wish everybody a good rest of their days. Thanks so much.
Thank you. Bye.
Thank you.